Welcome to the deep dive. Today, we're going to analyze Union Pacific,
Okay.
ticker symbol UNP, to see if it's a good fit for your portfolio.
That's good.
We've got company reports, financial analyses, and even some historical context
Okay.
to uncover what makes this freight hauling giant tick.
Well, Union Pacific's history is really deeply intertwined with the development of the American West.
Wow.
Founded in 1862, it played just a crucial role in building the first transcontinental railroad,
Interesting.
forging the legendary overland route that connected the Atlantic and Pacific.
That's a powerful legacy.
Yeah,
And it seems like they've carried that momentum into the present day.
right.
Union Pacific now operates over 8,300 locomotives
You got it.
and a massive 32,200-mile network across 23 states. It's hard to grasp the sheer scale of their operations.
Indeed. To understand Union Pacific's potential as an investment, we need to look beyond just the impressive numbers and delve into their financials. Their recent reports reveal an interesting mix of stability
Okay.
and potential challenges,
Gotcha.
while they boast a solid cash flow. And analysts are projecting growth in earnings per share. Their historical cash flow growth sits at a negative 6.61%.
That negative growth definitely warrants further examination. Could it be a sign of trouble, or is there more to the story?
Well, that's where context becomes crucial. Union Pacific has been actively investing in upgrading infrastructure and technology, which can temporarily impact cash flow. These investments are aimed at enhancing efficiency and driving long-term profitability.
I see.
Additionally, their sales-to-assets ratio of 41.79%
Yeah.
suggests they're effectively utilizing their assets to generate revenue. This ratio surpasses the industry average, highlighting their strong operational management.
So while the historical cash flow decline might seem alarming at first glance, it appears to be a calculated move for future growth. But how does Union Pacific stack up against its competitors?
So Union Pacific essentially operates in a duopoly.
With BNSF
Gotcha.
in the Western U.S. freight hauling market.
Okay.
This limited competition could grant them pricing power, potentially leading to higher profits. However, this dominant position could also attract regulatory scrutiny, as authorities often monitor industries with limited competition
Right.
to prevent unfair practices.
That's a great point. It seems like every strength comes with a potential counterbalance. Speaking of staying ahead of the curve, I'm particularly interested in Union Pacific's commitment to innovation. I understand they're incorporating cutting-edge technologies like 3D printing for training purposes.
Their innovative approach is certainly noteworthy.
Okay.
The use of 3D printing allows them to create realistic replicas of equipment,
Wow.
providing trainees with hands-on experience in a safe environment before they handle the real machinery. This not only enhances safety, but also boosts training efficiency, leading to a more skilled workforce.
It's fascinating to see how they're leveraging technology for both practical training and long-term growth.
But let's not forget about the bottom line,
Right.
valuation. What's the consensus among analysts regarding UNP's current valuation?
Well, analysts' opinions are somewhat divided.
Okay.
Some see UNP as fairly priced, while others believe it might be slightly overvalued. Their price-to-book ratio currently stands at 2.28,
Okay.
indicating the market values the company at a premium compared to its book value. This could signify an expectation of future growth, but investors need to consider the broader market conditions and the company's future prospects before making a decision.
It sounds like a classic case of weighing potential against perceived risk.
Yeah.
Now, have there been any recent acquisitions or mergers that could significantly impact Union Pacific's trajectory?
While Union Pacific has a history of strategic acquisitions, there haven't been any major moves recently
Okay.
that would drastically alter their current position or future outlook.
Gotcha.
This suggests their focus is on optimizing existing operations and leveraging their innovation pipeline for organic growth.
So let's break down the potential pros and cons of owning Union Pacific stock. What are some of the most compelling reasons for investors to consider adding UNP to their portfolio?
Well, several factors make Union Pacific an attractive option for certain investors.
Okay.
The freight hauling industry is inherently stable, providing consistent demand, even during economic downturns. Moreover, Union Pacific boasts a long history of dividend payments, which can be particularly appealing to income-focused investors.
That stable dividend history certainly speaks to their commitment to returning value to shareholders.
Right.
But what about the potential downsides? What risks should investors be aware of before making a decision?
Well, every investment carries inherent risks,
True.
and Union Pacific is no exception.
Okay.
Economic downturns, while not crippling for the freight hauling industry, can still impact shipping volumes
Wow.
and consequently revenues.
Hmm.
Regulatory changes in the transportation sector are another potential risk factor.
It makes sense that a company as large as Union Pacific would be subject to significant regulatory oversight. Are there any other potential drawbacks investors should consider?
Competition. Although currently limited by the duopoly is always a factor. New entrants or increased aggression from existing players could pressure profit margins.
Okay.
Additionally, accidents or derailments, while relatively rare, can lead to significant financial and reputational damage,
Yeah,
impacting investor confidence.
those are definitely valid concerns. Now let's dive into one of the key aspects that attract income-seeking investors: Union Pacific's dividend policy. What's their track record in this area?
Well, Union Pacific has an impressive track record of 18 consecutive years of dividend increases,
Oh.
demonstrating their dedication to rewarding shareholders.
Okay.
Their current dividend yield stands at a healthy 2.39%,
Hmm.
paid out quarterly, which is particularly attractive in the current low interest rate environment.
That consistency is definitely appealing for investors seeking a reliable income stream. Besides dividends, does Union Pacific engage in any other shareholder reward mechanisms, such as share buybacks?
Yes, they do have a share buyback program in place. However, their current share buyback yield are relatively modest at 0.23%,
Okay.
suggesting the primary focus for shareholder rewards remains on dividend payouts. Nevertheless, investors should monitor their buyback activity as it could increase in the future, depending on market conditions and the company's financial strategy.
That's an important point. It seems like Union Pacific is taking a balanced approach to shareholder rewards, prioritizing consistent dividends while maintaining the flexibility to adjust their buyback strategy.
Right.
Now let's shift gears to a topic that's gaining increasing importance for investors:
Okay.
ESG factors. How does Union Pacific measure up in terms of environmental, social, and governance considerations?
Union Pacific has implemented various initiatives to address ESG concerns. They've invested in low-emission locomotives, particularly in areas with stringent air quality regulations like the Los Angeles Basin. These efforts demonstrate their commitment to reducing their environmental impact and aligning with broader sustainability goals.
That's a positive step. It seems like they're actively working to reduce their carbon footprint.
Yeah.
Are there any other notable ESG initiatives they've undertaken?
They've also implemented various community outreach programs
Right.
and strive to maintain strong corporate governance practices. However, like any large company, they face challenges. There have been concerns raised about their handling of certain environmental incidents and the overall impact of their operations on communities. Investors focused on ESG factors should carefully evaluate these concerns and consider engaging with the company to advocate for continued improvement in these areas.
It seems like Union Pacific is making progress on the ESG front, but there's always room for improvement. Ultimately, it's up to each investor to decide whether their efforts align with their individual values and investment criteria.
Absolutely. Evaluating a company from an ESG perspective requires a comprehensive assessment of their actions and a commitment to ongoing engagement to encourage positive change.
That's a great point to end on. We've covered a lot of ground today, delving into Union Pacific's history, financial performance, innovation strategy, and ESG efforts.
Right.
We've explored the potential benefits and risks associated with owning UNP stock,
Yeah.
providing you with the information you need to make an informed decision.
Ultimately, whether Union Pacific is a suitable addition to your portfolio depends on your individual investment goals, risk tolerance, and investment philosophy. Careful research, a thorough analysis of the company's prospects, and an understanding of your own investment needs are key to making sound investment decisions.
Remember, investing is a journey, not a destination. Building a diversified portfolio that aligns with your long-term financial goals requires careful consideration and ongoing evaluation. If you're interested in diving deeper into Union Pacific, be sure to check out the full articles we used for this deep dive. You can find links to them in the show notes.
And for those eager to explore other companies and investment opportunities, head over to our YouTube channel and leave a comment letting us know which stocks you'd like us to deep dive into next. We appreciate your engagement and feedback as we continue this journey of exploration together.
It's fascinating how interwoven Union Pacific is with the American economy. They transport goods that are essential for a wide range of industries.
Precisely. Think about the sheer volume of agricultural products, energy resources, and manufactured goods that move across their network. Their performance can act as a gauge of overall economic activity.
So a healthy Union Pacific often reflects a healthy economy.
In many ways, yes, strong freight volumes typically indicate robust economic activity, while a slowdown in their business could signal broader economic concerns. This interconnectedness makes Union Pacific an intriguing case study for investors looking to understand macroeconomic trends.
That adds another layer to understanding Union Pacific's value proposition. But before we get ahead of ourselves, we need to address the elephant in the room: risk. Every investment carries some degree of risk, and Union Pacific is no different.
You're absolutely right. One of the primary risks for Union Pacific, as with many companies, is economic downturns.
Okay.
A slowing economy could lead to reduced demand for freight transportation, directly impacting their revenue and earnings.
That's a risk inherent to any company operating in the transportation and logistics sector. Are there any other risk factors specific to Union Pacific that investors should consider?
The regulatory environment is another crucial aspect to consider.
Okay.
The transportation sector is heavily regulated, and any changes in government policies could significantly impact their operations and profitability. For instance, stricter environmental regulations could lead to increased costs for Union Pacific.
Those are valid points. Regulatory changes can often create uncertainty for businesses operating in heavily regulated industries. Beyond economic and regulatory risks, does the competitive landscape pose any threats to Union Pacific's dominance?
While the duopoly with BNSF provides a degree of market stability, competition is never truly absent. New players could emerge or existing competitors could become more aggressive, potentially eroding Union Pacific's market share and putting pressure on their pricing power.
It seems like maintaining their competitive edge requires constant vigilance and strategic adaptation. Are there any other potential risks, perhaps less obvious ones, that investors should be aware of?
Accidents and derailments, while relatively infrequent, represent another risk factor. Such incidents can result in substantial financial losses, disrupt operations, and damage the company's reputation, ultimately impacting investor confidence. This underscores the importance of safety protocols and risk management for a company like Union Pacific.
Safety is paramount in an industry that involves transporting vast quantities of goods across the country. It's a reminder that even seemingly stable and established companies like Union Pacific face inherent risks that investors must carefully consider.
Exactly. Thorough due diligence and a realistic assessment of potential risks are crucial for any investor considering Union Pacific, or any company for that matter.
Now let's shift our focus back to some of the positive aspects that make Union Pacific attractive to investors, particularly those seeking income generation. Their consistent dividend payments have been a hallmark of their shareholder reward strategy.
Indeed. Union Pacific's commitment to dividend payouts is truly noteworthy. Their 18-year streak of consecutive dividend increases provides a sense of stability and reliability, particularly appealing to income-seeking investors. Their current dividend yield of 2.39% is quite attractive, especially in the context of today's prevailing low-interest rate environment.
That consistent dividend growth is a testament to their financial strength and their dedication to rewarding long-term shareholders. It's a factor that sets them apart from companies with more erratic or unreliable dividend policies.
Absolutely. A company's dividend history can provide valuable insights into their financial health and their commitment to shareholder value. Union Pacific's track record in this area certainly speaks volumes.
Now, besides dividends, we briefly touched upon share buybacks earlier. Could you elaborate on how share buybacks work and their potential benefits for investors?
Share buybacks, also known as stock repurchases, occur when a company uses its own funds to buy back its shares from the open market. This reduces the number of outstanding shares, which can increase earnings per share and potentially boost the stock price, benefiting existing shareholders.
So it's a way for the company to return value to shareholders by increasing their ownership stake and potentially driving up the value of their holdings.
Precisely. Share buybacks can be a powerful tool for companies to enhance shareholder value, and they often signal confidence in the company's future prospects. However, it's important to note that buybacks are not always the most effective use of capital.
It's a strategic decision that depends on various factors, including the company's financial position, the prevailing market conditions, and their overall growth strategy. Now let's circle back to a topic that's gaining increasing traction in the investment world: ESG factors.
Yes, ESG, environmental, social, and governance factors, are becoming increasingly important for investors who seek to align their investments with their values and support companies committed to sustainability and ethical practices.
It's a recognition that a company's impact extends beyond purely financial metrics and encompasses their environmental footprint, their social responsibility, and the strength of their corporate governance. How does Union Pacific fare in these areas?
Union Pacific has implemented several initiatives to address ESG concerns, recognizing the growing importance of these factors for investors and stakeholders alike. They've invested in low-emission locomotives, especially in regions like the Los Angeles Basin, which face stringent air quality regulations. These efforts highlight their commitment to reducing their environmental impact and contributing to a cleaner transportation sector.
That's encouraging to hear. It seems like they're making tangible efforts to reduce their carbon footprint and promote sustainability. Beyond their environmental initiatives, are there any notable efforts on the social and governance fronts?
They've also implemented various community outreach programs, engaging with the communities they operate in and addressing local concerns. Additionally, they strive to maintain strong corporate governance practices, promoting transparency, accountability, and ethical conduct throughout their operations.
Those are positive steps. However, it's important to remember that no company is perfect, and Union Pacific, like any large corporation, faces challenges in fully addressing all ESG concerns.
Absolutely. Investors focused on ESG factors should conduct thorough research, evaluate the company's progress in addressing these issues, and consider engaging with the company to advocate for continued improvement.
It's about recognizing that ESG investing is not just about avoiding bad companies, but also about actively promoting sustainable and responsible business practices and holding companies accountable for their actions.
Precisely. It's about encouraging positive change and supporting companies that strive to make a positive impact on the world.
It's been a fascinating journey, exploring the world of Union Pacific, a company so deeply embedded in the fabric of the American economy. We've uncovered a wealth of information, delving into their historical roots, their financial performance, their strategic initiatives, and their efforts to address ESG concerns.
It's clear that Union Pacific is a complex and multifaceted company with a long history of success and a commitment to adapting to the evolving demands of the transportation industry. They face challenges as any large corporation does, but their strategic investments in technology, infrastructure, and customer relationships position them well for continued growth.
As we wrap up this deep dive, it's important to reiterate that the decision of whether or not to invest in Union Pacific is a personal one. There's no right or wrong answer. And the best choice for you depends on your individual circumstances, your investment goals, your risk tolerance, and your overall investment philosophy.
Thorough research, careful analysis, and a clear understanding of your own investment objectives are essential for making informed decisions. Weigh the potential benefits against the inherent risks. Consider how Union Pacific's performance aligns with your investment horizon, and evaluate whether their ESG efforts resonate with your values.
And remember, investing is a journey, not a destination. It's about building a diversified portfolio that aligns with your long-term financial goals and reflects your understanding of the market. If you're seeking further insights into Union Pacific, be sure to check out the full articles we've referenced for this deep dive. You'll find links to them in the show notes.
And if you're eager to explore other companies and investment opportunities, head over to our YouTube channel and leave a comment letting us know which stocks you'd like us to deep dive into next. We appreciate your engagement and feedback as we continue this journey of exploration together.